Because at the end of the day, the reality is the reality. And if you can see it, it's pretty obvious, right? Once your brain has been programmed to see reality, you will always see reality. You will not be able to see anything else. You won't be able to see the full story. Like price was down here, and it ends up reversing down here, and the only legitimate zone down here was this one. It's the only one out of all of them. It's the only legitimate zone. And then what happens? Price comes and hits exactly there, and then reverses up. You know, so when you take a look at this chart, there's only a certain amount of really important zones here. Everything else is not important. There's only one picture, real picture here being told, and that's the thing. Is just, you know, can you spot it? Let me show you. So there's that. And there's that. 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 So that's pretty much all there is when it comes to this chart. To know what is taking place, this was what was the most important thing on the chart. Everything else is just little moves to help facilitate and to get to this, right? So when you look at the higher time frame charts and try to figure out what was taking place here, you know, this big move down, banks were shorting like mad. Okay, then they took profits down here, which fueled a move up. But as you could tell, they kept price in a range, right? So they take profits on shorts, it fuels a move to the upside. Then they lure retail traders in. Then they start taking their profits on long positions. And then they reverse price from going up to down. But then that very key area where the algorithms were filling in short orders gets replaced where the algorithms are filling in long orders. And then those long orders turn into short orders. But at this point, they know, the banks know that they're going to be taking price down. At this point, they know that. So now it's filling in short orders. And then the algorithms look for that last area where there was buy orders, and it's right here. So they make sure to remove it, which fills in more short orders. And that's it. So the two key areas where the banks were buying were here, or sorry, selling were here, and here, and here. And that's it. Out of this whole chart. That's the key story. Prices dropping, they took profits on their shorts because they you know they had strong short positions to get price down here. And then there's ranging. What's happening there? Offloading. If price continues to the downside, then they're offloading their original positions. Then they will try to accumulate those positions from higher up before pushing price down. And that is pretty much it on that chart. Let me see. Demand. Phew. I surely have a long way to go, but will continue working. It's inspiring to see how people are doing. Yeah. People are doing very well. Jonah was able to locate all those key areas. You know, has to work on his trend lines a little bit, but that's okay. Still was able to locate this, still was able to locate that. and then locate this. And then it's all about, reading price. Because when you first start with the school, right, all you're doing is you're taking the rules and you're applying the rules to the chart, right? And you're just like drawing random zones. This one, trend line here, supply here. Okay, that took out demand. And then it just, when you look at the chart, it's like, okay, I applied the rules to this chart and all I got is all these supply zones, all these trend lines, and all these demand zones. But these rules are just trying to get you to look deeper into the chart to see the storyline. That's where we're trying to get you to. At first, when you look at the chart, you don't see the story. You don't see anything but just up and down price action. And if you've been trading conventional technical analysis, what you're going to see is support and resistance, and Fibonacci retracements and 50% retracements and all that stuff. That's what your mind is going to think. And that's exactly how the banks want you to think. Okay? That's exactly how the banks want you to think. Remember what we were talking about? There's always two storylines going on, right? You have the reality, and you have the fake or false story, or negative, or you know what I'm talking about, narrative. So the reality is that the banks had price here, they wanted to get it here, and on the way down they wanted to take profits on those short positions here, and then they wanted to reaccumulate those short positions at the highs, and then they wanted to drop price down. Okay, that's the reality. Okay, the reality is, number one, the banks control the markets, period. Okay, the reality is that the banks know where they want to take price. Okay, that's the reality. So the reality is that the banks control the markets, and the reality is they know where price is and where it's going to go. And so the storyline is, that is the storyline. The reality of the situation right here. This is it. This is the reality. Okay? Now, for them to be able to take price from up here, okay, to eventually down here and profit, they need to create this false story and make the rest of the world believe it, or the vast majority of the rest of the world believe it. Why? Because in a game, there's always two sides. There's the one that is playing against the other. And if the one has the game totally rigged, they're going to win, but they still need somebody to play the game with them, right? They can't do it by themselves. And in this game, the reason why they can't do it by themselves is because for them to take price from those highs to those lows, they need to be opening and closing positions. Well, who are they going to be opening and closing positions with? The other banks who are in on it? I don't think so. Okay? It doesn't work that way. The other banks who are cooperating in this, they're not gonna be like, wait a minute, I'm not gonna take the opposite side of your position. I know the game. You want price to drop down. I get it. Okay, but I'm not gonna take the opposite side of your position. All the other retail traders, yeah, but not yours. So they're working together. All right, I just posted an article online on Twitter about who owns all the big banks, and the controlling aspect of those banks. Who are these people? You can look into that yourself and see. So the reality is that they're going to take price from that high to the low, period. But in order to do that, they need players to play the opposite side of what they're doing, okay? And to not see this story. Because if retail traders understood that the reality was price was at the highs and it's going to go to the lows, then how would they be able to win? How would the banks be able to win? They wouldn't be able to win because everybody would be getting in short positions. And if everybody's getting in short positions, don't the banks have to facilitate those positions? That means the banks would be forced to buy, right? And so if they had plans to take price lower, all of a sudden, it wouldn't work because now they're being forced to open up more long positions than short positions. So it doesn't work. So that you have the reality and then you have the false story. So what allows this false story to be interpreted? Because at the end of the day, the reality is the reality. And if you can see it, it's pretty obvious, right? Once your brain has been programmed to see reality, you will always see reality. You will not be able to see anything else. You won't be able to see the false story. So, this false story, how do people fall into these false stories? Well, they go to the library and they go to the bookstore and they buy these books about, the conventional type of technical analysis, fundamental analysis. Hey, it's all about fundamentals. You hear people swearing by the fundamentals. Hey, what are you talking about? You're not even taking into consideration fundamentals. Like, how crazy is that? Like, why are you not taking into consideration the fundamentals? Well, because the world doesn't work that way. I'm sorry, it doesn't. There may be times where you will get lucky and things will align with fundamentals, but at the end of the day, that's not how it works. The market doesn't work that way. All right? Does every stock go up because the fundamentals are good? Does Tesla stock go up in value because their banks, their books are good? No. Okay, so it doesn't work that way. So you go out and you read all these books about technical analysis, and what do they tell you? Support and resistance, Fibonacci retracements, and bat patterns, and shark patterns, and seashells, and double tops, and double bottoms, and blah blah blah, and blah blah blah. The idea is they give you very simplistic ways to say, look at the world and try to match. It's like playing. It's like putting together a puzzle. You have a puzzle and you have a missing piece. There's only one piece that goes in there. Which piece is that? It's the piece that has the two bumpy things sticking out on the sides. And so you grab that piece and you fit it in. There you go. That piece fits into there. Don't think about it. Don't analyze it. Don't be critical. Don't try to be logical. Just try to see the formation and then match it with what we wrote in the book. It's completely ridiculous, right? So you have stuff like price coming down here and creating a double bottom, right? Or reverse head and shoulders, whatever, right? And so what retail traders are taught to do is, hey, look, I spotted a reverse head and shoulders. Yeah. And in one of my books that I read, it says if you can match this picture in this book with what's happening on the chart, then you're a genius because you just located a reverse head and shoulders. And now that you were able to locate that reverse head and shoulders, we want to let you know, because we're writing it in the book, that if you see that, price is going to go really, really high up. Expect it to do something like that. And so people get all excited because they look at their book, chapter 13, reverse head and shoulders. And then the guy says, it's a very powerful pattern. The reverse head and shoulders has been known to produce incredible results. And so be on the lookout. And here, let me give you a secret little tip. If you do find a reverse head and shoulders, scan the news, scan Bloomberg and CNN, and see what the experts are saying, see what the fundamentals are saying. Because you know what? If the fundamentals support a reversal in price, and you get the triple bottom, the double bottom, the reverse head and shoulders, the bat pattern, the 50% retracement, the 50-day average, bouncing off of the 100-day average, moving average, and there's a double bottom at a triple bottom with some support there, then buy.
Professor, you should add some music on the background so you can make a rap.
This is how it is. This is exactly how it is, right? And then the book says, this is what you do. And so guess what? What do you think they form? What do you think these algorithms are forming here? They're like, listen, we've brainwashed the masses on what to look for, okay? We've told them, don't be analytical, okay? Don't be logical. Don't really look into who's moving the markets. Don't do research. Don't find out how the markets actually move. Don't apply any reasoning to the charts. Don't spend time researching and studying charts. By all means, whatever you do not look at historical charts for any long period of time. You want to study shit? Hey, build them some robots, build them some software that can do back testing for them. Because we don't really want them to start looking at charts for too long. So just build them back testing software where they can just type in a couple things, hit enter, and it does all the work for them. And it'll just pop out some good results. Because these idiots, they'll just swallow that up. Anything to keep them away from actually studying charts. Just like you think they want you to start looking at historical, archival, historical work, historical records, and putting pieces of the puzzle together and figuring out, like, if you bought 10 books about regular technical analysis, okay, and you applied all the techniques from those 10 books of the conventional technical analysis, if you are consistently losing money, then what does that tell you about conventional technical analysis? Is it good or it's not good? The answer is it's not good, all right? Because it's not giving you a consistent result. Because you should apply knowledge from a book into the real world and get results, okay? Just like if you want to learn about health, if you bought 10 books and you took the advice of those 10 books, but 5 years later you were not any healthier, then that means what's written in those books are not good. Then you should look at the authors. Who are these authors? Who paid these authors? What have these authors written before? And then look at their previous books and start to determine if it's valuable or not. And you'll come to realize that if some book is written by some organization, some author about a specific topic, and you try to apply what's in that book to the real world and you're not getting good results from it, then that means it's garbage. So that means you're off. You have to get off that trail and go onto another trail, which is, this leads into the article that I wrote this past weekend about I like to research things that are unconventional, because convention is where you have problems. If you're going to do like everybody else does, you're not going to get good results, because the vast majority of people have been taught a certain way to not get the good results. Just like the vast majority of traders have been taught a certain way so that they are not looking at the reality of the situation. They're looking at it as a false story. They're looking at the false story. But that false story allows for the bankers to make the money consistently over and over and over and over and over and over again. And what they say the definition of insanity is when you continue to do the same thing over and over again, and you do it anyways, even though it loses you money. Why? Because there are times where sometimes they will give you a little bit of money, right? Look at Tim Dowler's work, okay? He's tracking retail traders, right? And he brought a lot of good insight, okay, into what we were finding. Like, it's one thing for me to say, hey, look, just using logic and looking at the markets, you can see that there's times where the banks will give you back a little bit and allow retail traders to make money from the conventional wisdom that was offered in these books. There's times where a double bottom works. There's times where support and resistance works. There's some times that 50% retracements work. Because if it never worked, you'd give up on it. But the thing is, they make it work just a little bit of the times, because they understand that human psychology is, if you give a treat to a dog every single time they do something, okay, every single time, that's not how you teach them, okay, because they'll be expecting it. What you want to do is you want to give them a treat once in a while, because the dog, knowing that sometimes he gets the treat and sometimes he doesn't get the treat, he will want to, more often than not, want to do the trick, because he's hoping that maybe this time he'll get the treat. And it's the same thing with people in casinos, right? They go in, they know that the vast majority of the time they're going to lose, but they also know that there's that chance that they can make it big, okay? And 1 out of 10 times they'll make a small amount of money, and that's it. That's enough for them to continue to go into the casino and lose all their money. Because at the end of the day, they lose all their money. That's like the end result for most of them. The vast majority of them is they lose all their money. But that's just enough to keep them in this game. So this game works the exact same way. The same thing. They just give you a little bit. So yeah, of course, every once in a while. And Tim Daller has, he extracted that information. It's one thing in theory, but he was actually able to extract that information from the markets and say, hey, the retail traders got in here and then they got out there. So they made a little bit of a profit. Then they got in here and they got out there. They made a little bit of a profit. And then they got in here because of this chart formation. And guess what? It went against them because the banks pushed price in the opposite direction. And then guess what? All those little profits that they just made, they just lost, if not even more. So there's
I had a good laugh when I started putting it together. It's always a little bit. When they win, it's always a little bit.
Always a little bit. Yeah. So there's the reality, and then there's the fake story, the false story. And it's, this is how life works. This is how life works. This is how the market works. This is how life works. They take the same principles that they use in the real world and apply it to the markets. It's so convenient. And all you have to do is think about it. Do you think the biggest bankers in the world who are trying to make money in the markets, do you think that they would allow knowledge to be out there in mass form all over the place that would basically go against what they're trying to do? Do you think they would allow all the big networks to have experts on saying, well, the banks are moving the markets against you, be careful, because some data is going to come out in 2 hours, but I have a feeling that they're going to say it's positive. Why? Well, because we're coming into an area of supply, and you know how the banks are. The banks want to screw you up. Do you think they would allow that? Hells no. Hells no. That guy would be fired in a heartbeat. Why? Because somebody would call his boss and say, hey, take him down. And what's the boss going to do? Hey, I have integrity. I don't want to take down this guy. We're getting a lot of ratings. And then you know what the other banker says? Oh, yeah? 50% of your advertisers that pay you? Yeah. They're friends of mine. All I got to do is make one phone call, and they'll never advertise on your network ever again. And then what's going to happen with your network? Yeah, that's right. It's not going to look so good. So how are you feeling about firing your guy now? And that's it. Then the guy's done. There's no integrity. They don't care about that. They care about staying in business. So when you realize that, then you realize, oh, okay, something different's going on here. Well, yeah, exactly. And you can see it, right? You can see it in the markets. It's plain and simple. It becomes plain and simple in the markets because we study the markets for a living. Okay? We study the markets for a living. And so we